Speaking of big numbers, somebody else has taken home a big number this week. Chris Huhne.
Yes, the £1.2 million per working day payout, 278 million, I think.
Yeah, and you can imagine what some will say about this, a sort of city greed, hedge fund manager taking loads of cash, enjoying, sort of general visions of dinner parties and backslapping. Another week finishing up in the City of London. I'm Andy Sylvester, editor of City AM. I'm here with, this is
Rupert Hargreaves, news editor of City AM.
And we're going to whistle through a few topics that have been keeping us busy this week at City AM Towers. Rupert, I want to talk about the London Stock Exchange.
Which part?
Which part? Plenty of it. We've been talking for a long time in London at City AM about the fact that London companies listed here aren't necessarily able to keep their valuations as high as they might like for a whole number of reasons. And that's left a fair few of them vulnerable to take privates, effectively private equity, turning up, taking them off those public markets with offers that I guess are a little bit at a discount. And what you'd obviously want is the public markets to keep those valuations nice and high, keep those companies safe and sound from private equity raiders. One today, we had SMS, a smart metering services company, being picked off by KKR for 1.4 billion. We had the 10 Entertainment Group, which runs bowling centres in the UK, picked off for about 300 million. And we also had TUI, the travel giant, saying that they're considering delisting themselves and just listing in Frankfurt because of liquidity. It's a big deal, this, isn't it?
Yeah, and it's interesting you say that they're going private at premiums, and they're going private at massive premiums.
Yeah.
The Hotel Chocolat a few weeks ago, it was 100% plus premium to its valuation. That's not a rounding error. That's a significant change. And same with 10 and the KKR buyout we've seen with smart metering systems. These were significant premiums, and they're private equity companies that are obviously seeing the opportunity here. They don't hate the UK as much as the UK investors do, apparently.
Yeah, well, it's something you hear quite often when we're out and about in the city, is this sort of frustration from CEOs, from investment relations people of these companies that are looking at their valuations, they're looking at their results and how they're doing, and they're saying, hang on, we're doing pretty well, or at least it looks like we're doing pretty well on paper, and yet it's not being reflected in those market prices. But as you say, private equity, ever the opportunist, saying, we'll have a bit of that.
They're generating cash, and they're generating a lot of cash, and private equity can buy this cash cheaply at double-digit free cash flow yields, and they can lever up and give their the private equity investors lots of return.
Yeah,
if they will take it.
Yeah, no. So I guess the question is always, does it matter if London's equity markets are depressed, if the valuations are low? Because, the companies might go into private ownership and be healthier and thrive. But I guess the argument back is for not just our own prestige as a financial capital, but you need equity markets to work in order for private markets to work. Because those private equity raiders, they're also thinking about their exit, right, down the way. And in order to have that, in large parts, you often need a thriving IPO market and a thriving public market. So it's a bit of a catch-22. And I guess the hope is that all this private equity on it coming in means that in a few years' time, there will be appetite that there isn't necessarily now for bigger bumper IPOs, I guess.
Well, if they come back, or if they come back somewhere else, or if they just stay private. But also, where's the money going? I mean, a small UK-listed business will invest in the UK.
Yeah.
Private equity company will lever up to 7 times EBITDA, borrow money from the American banks, and that money will go to American banks through offshore tax havens. It won't go back into the UK economy. Yeah. That's a lot of value that's coming out of London, going around the world, and it's not going back into the UK.
One other company on the London Stock Exchange, which has never been accused of having a rough valuation, although its valuation is smaller than it used to be, is British American Tobacco, kind of on the front line of a shift away from traditional cigarettes towards newer products like vapes and heated tobaccos. They told markets this week they were taking a £25 billion write-down on the value of their US legacy brands. Sort of thing that anti-smoking campaigners should be quite happy about, but shareholder BAT, investors in BAT, not exactly thrilled about that.
No, it marks where the company is, and if you actually read in the details, those values. So they bought Reynolds American in 2017, I think, for $50 billion. They're now saying they've written it down. It's written it down by £25 billion, $30 billion. Yeah. So that's a significant write-down of something that happened only a few years ago. And they're going to write down the rest of the value of the assets, smoking assets, over the next 30 years, which kind of suggests they think smoking is going to have disappeared in 30 years' time.
Certainly in developed markets. In the US, I was looking at numbers the other day, 20% of US males in 2011 smoked. It's now around 11%. And there's no reason really to believe, despite the sort of public health panic over vapes, that people puffing away on their bubblegum flavoured things are going to suddenly start picking up cancer sticks again. So there's no reason to believe that's going to go forward. So you're right, they're all banking on what BAT call it, a smokeless future.
Well, their smokeless arm has become profitable 2 years ahead of forecast. Yeah. I think that's what they were hoping the market would concentrate on, not the £25 billion write-down.
Well, the first time I read the results, I did focus on that, and it was only when I read it again that I thought, that's a big number.
But they're maintaining their dividend.
Yeah, they are maintaining their dividend. Speaking of big numbers, somebody else has taken home a big number this week. Chris Huhne.
Yes, the £1.2 million per working day payout, 278 million, I think.
Yeah, and you can imagine what some will say about this, a sort of city greed, hedge fund manager taking loads of cash, enjoying, sort of general visions of dinner parties and backslapping. Actually, this guy's the biggest philanthropist in the UK.
Yeah, I mean, well, first of all, it's a 50% pay cut, roughly, since last year. He was paid nearly 600 million last year. So
cost of living crisis hits everybody.
Crisis, yeah. No, his hedge fund TCI was set up on the basis that a certain percentage of its profits would be donated to charity. Mm-hmm. And his charity does have several billion pounds worth of assets. Yeah. And it donated a couple of hundred million last year. So he's a very charitable man, but he pays himself quite a lot.
Speaking of that world of hedges and fund management, less good news, I think it's fair to say, for Jacob Rees-Mogg. Somerset Capital, his fund manager, which he set up a fair few years ago with a few friends and associates. It's had an interesting period, but they're now announcing that it will be wound down. And all of this starts to shift on sort of move by St James's Place, itself fairly embattled.
Yeah. Well, they've been under pressure to reduce their fees, and they decided they were going to, as part of that shift, they were going to move away from Somerset Capital.
We'll wait and see what Jacob Rees-Mogg has to say about that on his GB News show. I wonder if there are people. There
are easier ways to make money than trying to manage money.
Yeah, there are easier ways, although I wouldn't necessarily recommend...
GB News?
Actually, no, GB News probably is an easier way to make money for Jacob Rees-Mogg. Certainly, it looks like he's in his natural habitat. All of that, there's been lots. It feels like one of those weeks where there's been lots going on. But looking ahead to the city, we had a piece this week by one of our reporters, Charlie Conchi, and his colleague Lars Mucklejohn, looking at investment banks in the city, which have been a fixture of the square mile for decades, right? These names we can roll off the tongue: Numis, Peel Hunt, etc., etc. They've been hit by this IPO slowdown that we were talking about earlier. The fact that public markets are depressed is obviously hitting their bottom lines. So Charlie and Lars were intimating and speaking to a fair few analysts that suggested that these deal makers, those who have been involved in other people's deals, might soon be the subject of their own deals, with them very much in the crosshairs.
Yeah, and that makes sense. Scale is everything. And you mentioned Peel Hunt. It's a big player in London, but it's not a big player internationally. And the big American banks will be able to take market share. So by combining these smaller players, we'll be able to fight the bigger invaders more effectively.
The invaders, it always reminds me of that Monty Python scene with the Crimson Assurance Company, with these old city gents fighting off the American
sailing
corporates
across the Atlantic.
Exactly.
Yeah.
Well, it's coming the other way. We've certainly had a busy week. I'm sure we'll have a busy week again next week. It's the last big week, I suppose, of corporate results and so on before the Christmas wind down. Rupert, thanks for joining me in City AM studios. And don't forget all the news, views, opinion, analysis, everything from the Square Mile and the wider business community on our website and, of course, all over our social media channels as well. Till next time.